Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're discussing Shiba Inu. We've seen some interesting price action with some interesting candlesticks and potential for SHIB to pump over 125%. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe and you will not miss another video update. Let's jump right down into today's video, taking a look at the technical analysis here on SHIB, kicking things off with the 1 hour time frame. So here we can see this move to the upside back up towards the 200 hourly EMA and our equilibrium here. And equilibrium essentially is a 50% move between the most recent lows and highs. Okay, so you can see here we have the premium area and we have the discounted area. Think of the equilibrium about 50% distance between the two. Now on this hourly chart, we do have to acknowledge that we are in a bearish structure at the moment. So we had the change of character from bullish to bearish. We had a break of structure to basically confirm that we are in fact bearish, right? So we have to kind of take that on board. That if we want to move to the upside, we're going to have to break out of this structure, okay? Now, at the moment, we haven't done that, and I don't suspect we're going to do it right away either. I still think we have a bit more to the downside before we start this rally to the upside. But I do think we are going to start seeing a nice significant surge here for Shiba Inu. Okay, so let's just dissect this down a little bit, right? What do we see? Well, we can see that we're below the 200 hourly EMA, but we're above the 50 EMA here, just about. Okay, we're kind of finding it as a bit of support for us. You can also see that a fair value gap was left behind. That's this light green area down here. This fair value gap was created from an imbalance in the order books. Large orders down at the low side couldn't get filled until they're on the high side, and essentially this gap, this candle here, essentially leaves this gap behind. And that's basically representing an area in price where liquidity was insufficient. So price likes to come back down and put liquidity where liquidity was not. Okay, so essentially that's what this is showing us. We haven't filled this gap yet, so we have to come down a little bit deeper to fill this gap out, in my opinion. And I think that is really what the 4 hour and 8 hour stochastic RSIs are telling us. The way that we're overbought, we're expecting some kind of cooling off. However, I would not expect us to call off right away. We have still got this potential bounce back to the equilibrium before coming back down here. Okay, so expect some volatility on the hourly chart. That's essentially what I'm saying. But when we go up into the daily time frame for Shiba Inu, this is really where things start to get more interesting, because we do have this 125% move right here, okay, for Shiba Inu, okay, 125.42%. And at the moment, we've had this cooling off period that we're not yet kind of completed with, okay? But I think we are going to be in an Elliott wave structure that is actually quite important and quite decent. So let's go ahead and take a look, right? So what have we got to start with? Well, we are in a bearish structure for Shiba Inu, right? We have our break of structure here. This is confirming a break of structure from up here as well. We haven't changed out of our bearish structures on Shiba Inu on the daily time frame, right? It remains to be bearish at the moment. Now, our Elliott wave theory structures are telling us actually it might not be as bad as it might look. Not to say that we're going to break out of the daily bearish structure, but a move to the upside, I think, is something that we need to be experiencing. So if we take a look at the bounce that we had here, for example, you can see that we have this move coming back down to a double bottom theoretically, right? So I'm saying that we do have to see a bit of a move to the downside, basically down here at 50392 to 55953 all the way down at this low end. This is essentially a 3-wave correction. Now, we've already met our minimum expectations. We don't have to go all the way down here. We've met our minimum expectations already. And it does look like we have a 5-wave move internally. So I'm not expecting us to actually go down this low. This is just like worst case scenario. I suspect we'll probably actually move down not terribly too much further before we move on up, but I could be wrong. Ultimately, we do have the ability for a double bottom. That's technically possible, but for the most part, I wouldn't expect it to slip that low. Look more towards maybe the kind of 61525 area as the potential kind of finishing of the C-wave structure, more on the 786, maybe even a little bit higher at 66285 on the 618. Okay, so these are going to be the key areas for me. Ultimately, though, when this completes, I would expect a 125% move to the upside. And this will be on the back of essentially a 3-wave pattern from here. Started at that low, let's hypothetically say that we do go down to about 62010. This will then show us with a theoretical move all the way back up to this high here at 139780 and 169336, right? So you can see it here. And what that will essentially allow us to do is it will allow us to say it's a 125% move from wherever we end up being on the low side to the upside. So we'll go ahead and pop it right here for now. Okay, so you can kind of see and get the idea that, yeah, we've got this 125% move potentially on the horizon. You can see it right about here, 125%. So it's looking actually reasonably strong for a bit of a move to the upside. Pretty lucrative one at that. And of course, this can change and morph into something else. It doesn't have to stop here. It could go to the 1.618, turn impulsive, and go significantly higher. But for now, from where we are, our bear market low point upwards here, it does look like we have that potential. Now, again, if we only come up a little ways here, we have to also acknowledge that there's still this bearish structure. But if we can get a closed position above that 200 daily EMA and 50 EMA, that should push us in a stronger position overall, where we might be able to break out of this downward trend that SHIB finds itself in. Now, from a weekly standpoint, we are unfortunately still finding ourselves with those major problems. We're basically looking at that 50 EMA, as you can kind of see here, as our resistance. And it's no surprise that on the 7th of August, we got rejected here, and we have slipped down quite aggressively. Now, a bounce to the upside, I think, is likely to happen, and then we'll continue to slip back down to the little bit lower in price chart, right? We obviously have our bear market low at the moment, and if we are able to get a weekly close above the 50 EMA, that would put us in a slightly stronger position than we had seen previously. Again, no guarantees, but that three-wave structure that we're talking about on the daily time frame would essentially get us above that 50 EMA and could put us in a stronger position. It doesn't necessarily put us in a long-term strong position, but taking a look at everything that's going on here, it does look like we have the potential to have this one as either a B wave movement or a start of another structure to move to the upside. My worry would be that we'd have something like this that would continue us into lower lows and bear market lows and so forth. Okay, so there are those as concerns. So we'll have to just be a little bit cautious with that. But for the most part, that's kind of where I think Shiba Inu is currently sitting. And I think that's going to wrap up today's video. Found it useful? You know what to do. Smash that like button. If you're new to the channel, subscribe and you'll stay up to date with more video content just like this. Join us in Discord if you want to continue the conversation. It's a fantastic community down there, talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And of course, if you haven't yet signed up to BitGet, 𝗕𝗄𝗃, and other exchanges, then all the links are in the description below. I think it's a great strategy to have exposure to as many of these exchanges as you possibly can. So why not go ahead and sign up? There's some fantastic deals available as well, but it is limited depending on your region. Know the risks involved in trading. I'm obviously not a financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. Until the next one though, guys, have a fantastic day.